Do I specify that they apply that to the principal only? So, Ms. Conyers, here's the thing. If you are escrowing, all right, so let's say your taxes and insurance are part of your payment, you do have to specify it. But if you're just paying principal and interest, you don't have to specify it because there's only one place they can put that money. It has to go to principal. That's the only place it can go. If you're escrowing, they could put it in your escrow account. In fact, that's the default. If you send them a check, an extra amount, and you don't specify according to their rules, and the rules are specific to the banking institution you're dealing with, whether it's a mortgage company or a bank, the rules are specific to them. And you have to let them know in the way that they want to be notified that you are making a principal payment, so that they won't take that money and put it in your escrow account. If you don't have an escrow account, if you're paying the taxes and insurance on your own, and you can do that, then they have to apply it to principal. That's the only place it can go, to answer your question. But watch this, Ms. Conyers, watch this. She says, let's highlight that. She says, wow. She says, wow. Okay, watch this, Ms. Conyers. What if you make your January payment, and let's say you have a little bit of money sitting in your bank, and the interest that they're paying on these accounts is barely nothing. It's like 1/10 of 1%. The last time you looked at your statement and you have money in your savings account and they showed you that you had like 1 penny or 2 pennies in interest, you have several $1,000s in there and they gave you like 2 or 3 pennies worth of interest. Oh my gosh. 1/10 of 1%. Not even a whole percent. 1/10 of 1% is what they're paying. Watch this. So you make a mortgage payment, and let's say you have about $1,200. So your principal payment on line 2, line 3, and line 4. Okay. Let's see. That's like $1,245. Okay. Let's just round off. $1,245. You can take $1,245 out of your bank account, apply it to this loan, and knock off these 3 payments that you never have to make, and save nearly $1,800 in interest that you never have to pay the bank. And your next mortgage payment for February would be on line 5. So, Ms. Conyers, what do you think about that? Does that help you to understand how you can pay this loan off faster and cheaper? Because if you take that money that you would have paid according to the bank's system, you would have paid this loan down. I need you to watch this cumulative principal and cumulative interest. Okay. Cumulative principal and cumulative interest. All right. In 4 months, doing it their way, you would have given them $1,656.14 in principal. But look, it would have cost you $2,397.50 doing it their way. Doing what I just suggested is you give them this much money, but it doesn't cost you $2,397.50 to do it. It only costs you $600 to do it. Oh!
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.